Thanks, Ron, and good evening, everyone. Many very smart people consider the Cambridge-Boston area, with Kendall Square at its epicenter, to be the most fertile innovation environment in the world today that continues to grow new companies and continues to attract technology and science leaders from around the world. As we reported last year, the demand from technology and life science companies led to extremely tight vacancies and propelled rents to all-time record highs. We are here today to report that vacancies are even tighter, and for that matter, are non-existent in some submarkets. And rents have spiked significantly again to new highs. There has never been a market like this. Little available space, tons of demand, rents off the charts, very happy landlords, really mad and frustrated tenants. Let's take a look at the numbers. First, the 9.7 million square foot lab market. Tenant demand accelerated through the first half of 2015 and remains fairly strong today. The vacancy rate dropped to 3%, which in fact is deceptively high given other commitments now pending. The operative rate is more like 1.5%. Positive absorption was a very strong 1.28 million square feet. The construction completion of 3 build-to-suits, 2 by Novartis on Mass Ave and 1 by Ariat on Binney Street, contributed 770,000 square feet to the absorption. Also, transaction velocity occurred at a frenzied pace as tenants hustled to secure space. Velocity was literally off the charts. There were 38 new leases totaling 1.8 million square feet and 6 renewals totaling 308,000 square feet. A record-breaking year. Throughout the year, tenants were acutely aware of the fast-dwindling supply and moved quickly and aggressively to secure space. All segments of the life science ecosystem contributed to the demand. Big pharma and emerging biotech companies led the way. Bristol Myers Squibb, AbbVie, and Eli Lilly were all new entries to the market. Pfizer leased an additional 130,000 square feet in order to bank space to ensure its future growth. But without doubt, the biggest story is the breadth and depth of the growth and expansion of both the young and the emerging homegrown biotechs. Alnylam and Bluebird led the way with major transactions. In total, 34 emerging biotechs leased 1.47 million square feet, accounting for 63% of the total space leased. Tenant after tenant after tenant in all size categories just kept showing up and leasing space. The lack of immediate available space is also forcing tenants to pursue potential future availabilities, in some cases 1 to 4 years in advance. Alnylam actually signed a lease in early 2015 that will allow the company to occupy the entire 675 West Kendall Street building in early 2019, a good 4 years later. There are also a number of tenants now actively negotiating to secure lab space that may not be physically available for 1 to 2 years. We have not seen early lease commitments like these before in Cambridge. As we move into the new year, current demand remains fairly strong. Although the frenzied market that I have described seems to have calmed a bit during the fourth quarter, I don't find this surprising given the incredible demand absorbed by the market in the prior 18 months and due to other headwinds like the unsettled public financing markets and the political controversy brewing over drug pricing policies. We are currently tracking 18 tenants with requirements for just over 1 million square feet. As you see, virtually all the demand is coming from young and emerging biotechs. Big pharma and big bio have no active requirements at the moment. Lab rents are way up again to record highs. In the East Cambridge submarket, asking triple net rents spiked 16% year over year. This is on top of a 15% spike in 2014. Landlords have also been successful in shaving back tenant improvement allowances and lengthening lease terms where possible, further improving returns. Okay, now let's take a quick look at Cambridge's office market. Same story, low vacancies, record high rents, great transaction velocity. What a market. Overall, vacancies have dropped to 6.2%. And in the 4.8 million square foot core Kendall Square market, vacancies fell to a super low 3.6%. Total absorption was strong at 493,000 square feet. Despite the tight conditions, transaction velocity was robust at under 1.6 million square feet from 44 transactions. That's a large number of transactions which came from tenants of just about every size. Like 2014, demand flooded the market and filled in the gaps where available space existed. Traditional tech office users led the way with 44% of the space leased. Good demand also came from big pharma and emerging biotech companies. The attraction of the MIT-infused ecosystem was confirmed again by three key transactions. Homegrown software high flyer HubSpot was able to piece together a large block of space in two adjacent buildings, achieving its goal of staying in Cambridge near MIT, where the company was founded. Sanofi, which had purchased homegrown Genzyme in 2011, decided to keep its strong presence in Kendall Square by leasing 50 Binney Street, a build-to-suit from Alexandria. As part of the move, Sanofi also plans to vacate the iconic Genzyme Center. And then finally, IBM parachuted in with its Watson Health business unit and quickly subleased 75 Binney Street from Marriott. On the surface, current demand looks fairly strong at 1.75 million square feet from 20 tenants, but 4 tenants account for 76% of the total. Akamai and Biogen are active in the market with very large requirements. Rumors say that Microsoft will likely renew its lease at 1 Memorial Drive. As you can see, tech companies and big bio, mainly Biogen, account for most of the demand. While these demand numbers look good, overall demand has actually fallen off through the final third of the year. Buildings with vacancies have been reporting light activity and demand. Asking rents rose again to record highs, although the rent growth was more moderate than in 2014 and was less than half of the rent growth achieved by the lab space. This next slide shows 3 recent leases with very healthy rents that average in the mid-80s to the low 90s gross. These have to be the highest rents in the region. I am sure that you all have questions about potential future supply, especially for lab space. Barring a severe economic recession, Cambridge should remain super tight for years to come. We have identified 750,000 square feet, a relatively modest amount of existing product likely to become available over the next 3 years. This supply cannot even come close to accommodating the levels of demand recently seen in the market. What are growing lab companies going to do? There may not be a good answer. There is also little available existing lab supply and few buildings ready for lab conversions in the logical overflow markets like the inner suburbs, Route 128 West and North, and the Seaport. What we have here is a supply gap that should last until new product can be consistently developed. What about new development? Well, most of the major proposed major projects in the pipeline will not be able to deliver new product until 2019 at the earliest, further highlighting the supply gap. Let's review the status of these developments. North Point was purchased by Divco for $291 million and should be well positioned for office or lab development. Divco has been reworking the project's master plan and said its plans include a 300,000 square foot speculative lab building with a possible early 2019 delivery. And I would just add, if there was ever a market to build a spec building in, Cambridge is it. Boston Properties won city approvals in December for the upzoning of the Kendall Square North parcel to create an additional 600,000 square feet of office and 400,000 square feet of residential. The new development will be located above, beside, and around the North Parcel garage. Boston Properties says they can deliver the space by early 2019. MIT is getting close to securing design approval from the city for its Kendall Square initiative. MIT hopes to transform its East Campus and to provide for a real integration and connection to Kendall Square and the city. The plan includes 3 commercial buildings totaling 940,000 square feet of office or lab space. MIT could potentially deliver product by Q4 2019. And finally, the GSA's process for the sale of the Volpe Center, located in the very heart of Kendall Square, is progressing. GSA is hoping to issue an RFP to the remaining qualified bidders in May and to select a developer by February 2017. The city is also in the process of rezoning the site, with the latest proposals allowing up to 1.7 million square feet of office and lab space, in addition to a new 375,000 square foot facility for Volpe. The very complicated deal structure likely means that any new product would not deliver until sometime after 2021. As you can see, the supply gap until 2019 is very real. We expect the tight markets and the lofty rents to continue, perhaps becoming the new normal. We have been on quite a ride in Cambridge these past 2 years. I have a funny and hopeful feeling that this ride is going to continue. Thank you.